Hello, John Griswold here with Griswold Group. Excited to fill you in on what's going on in the San Diego real estate market. So we've had a lot of volatility over the last 2 weeks because of what's going on geopolitically in Iran. So we're having, big fluctuations in gas prices. Interest rates are all over the place. We're having more fears about inflation numbers, what's the jobs report's going to look like. It's causing a lot of confusion in the marketplace, and usually when you have confusion, you have a market that starts to slow a little bit. If we didn't have this geopolitical event going on, all signs were pointing towards interest rates being solidly below 6%, potentially even having the Fed drop the federal funds rate again, because right before all this happened, we were seeing inflation was in a steady decline to start the year, and we were seeing some cracks in the jobs market. We actually lost, I think, 92,000 jobs or around that number before all this went down. So that was kind of where we all thought things were going to head. But then, of course, we're in this situation in Iran, so that's causing a little bit of confusion in where things are headed. Basically, we are now on a almost identical track in terms of speed of the market, supply and demand dynamics as we saw last year in 2025. It's almost an identical curve. We are finishing up the winter market right now. We're about to enter into the spring market, which is the hottest time of the year for transaction volume. So there's going to be a lot of business that's going to happen over the next 4 months. And so regardless of what's going on in the world, there is still a lot of demand to buy and sell. And so we will see where all of this shakes out. That said, more than ever, it's not a great time to test the market if you sort of have I would totally sell if I get this aspirational price. If it's me, I would wait for a more stable market before I burn market time with an overpriced property. Now is a great time if your motivations are right. Price it at maybe slightly below the range of comparable value, and there's enough demand in the market that's going to soak up that property to potentially have low multiples of offers, which then more often than not leads to the highest possible price, the best possible terms, and a smoother close because you have multiple parties that are all wanting to buy the property at the same time. So think about that. Also on the buy side, I know rates are up a little bit, you guys, but there's still a lot of competition in the market. So if you really like the house, if it's that 8.5 out of 10 that I always talk about, and you're seeing a busy open house, don't assume you're going to get a lot off of the sales price unless we look at what's recently sold and we just feel like the property is just not priced right. If it's priced pretty well, it's going to move quickly in this market, even with everything going on. So that's kind of where I'm seeing things headed. Pay attention to what's going on with the Fed. I'm watching what inflation data and jobs data very closely right now. Obviously, the price of gas is also having an indirect impact, as well as the equities market. So there's a lot of things to track, and we'll see where this all shakes out in 2 more weeks. And I'll talk to you on the next one.